time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
So yes, PyroGenesis Canada Inc., PYR on the TSX. So the last time that I covered PyroGenesis was last fall as a dog of the week after the stock was down 72% year to date and down about 40% in a month. And at the time, the stock traded at about $1.08 and had a market cap of about $187 million. And like I said, the reason I'm covering the stock is we received a comment on YouTube stating that the company got its first contract. And there were many other comments on our YouTube video, which both ripped into me, as well as some agreeing with my analysis that, in fact, the company was a dog. And I just think that it is kind of funny that I received so much hate. As I stated in my conclusion, PyroGenesis has potential, but considering the decline in revenues and its inability to generate profit, leading to the collapse in its share price, it was, in fact, a dog. And I still stand by that. So looking at the company, today the stock price and market cap are essentially the same as when I covered it a year ago. I believe the stock actually closed at $1 today, and it has a market cap of about 190 million. So PyroGenesis designs, develops, manufactures, and commercializes plasma processes and systems in Canada, and they provide engineering and manufacturing expertise, cutting-edge contract research, as well as turnkey process equipment packages to the defense, metallurgical, mining, additive manufacturing, which includes 3D printing, as well as oil and gas and environmental industries. And a few of its segments here are it offers its Drossrite, a process for enhancing metal recovery, including aluminum and zinc industries. Its PureVap, a process to produce high purity metallurgical and solar grade silicon from quartz, as well as its PureVap nano silicon reactor, which is designed to transform silicon for use in lithium ion batteries. The company provides its plasma torches for replacing fossil fuel burners. It offers plasma arc waste destruction systems for waste destruction, such as on ships or large boats or ships. As well, the company also provides engineering and manufacturing expertise. So looking at the recent updates by the company, number one, on May 30th of this year, PyroGenesis signed an initial 5-ton order for its atomized titanium metal powder produced using the company's next-gen plasma atomization system, which includes a conditional agreement for 6 additional tons with a down payment currently received. And the powder will be used for 3D printing. Now, there were no dollar values placed in the press release of the contract announcement, but I found on the web, from the help of Brett, that about 2,000 kilograms of titanium powder sells for about $1,500 Canadian. So the initial kilograms. Sorry, thank you.
Kilograms.
2 kilograms. Thank you, Brett. So the initial 5,000 kilograms would equate to about 3.7 million, which, yes, is positive for the business, but I do not see it as a substantial catalyst for the business's fundamentals, at least in the near term. Now, number two, on May 23rd of 2023, PyroGenesis received approval for an 180-day extension to continue to trade on the NASDAQ until November 20th of this year. As by this date, it must have a closing bid of at least $1 US per share for a minimum of 10 consecutive days of trading, or it will be delisted. And right now, the shares trade at about 78 cents US on the NASDAQ. And realistically, this news isn't a huge deal, as if the stock doesn't meet the requirements by the date, the company will likely just conduct a share consolidation to get the price back up into compliance. And finally, looking at the fundamentals here, or the financials. So the most recent quarter was Q1 of 2023, and revenue was down 38% to 2.6 million. Net loss was 6.1 million, or a loss of about 3 cents per share. And adjusted EBITDA also came in at a larger loss than the same period last year, losing about 5.8 million this year compared to a loss of 2.8 million last year. And as at March 31st, 2023, the company had a cash position of about 1.9 million and debt and leases of about 6.9 million, providing a net debt position of about $5 million. And keep in mind, this cash balance is down significantly from Q1 of 2021, when it had a cash position of 26.3 million And once we subtract the debt and leases, it had a net cash position at that time of $23 million. So much different. So with its dwindling cash reserves, unless the business can actually get into profitability and cash flow, the business will likely have to issue shares or take on debt in the future to keep the lights on. And because of the lack of profitability, EBITDA, and cash flow, we can only value the stock off of revenue, which right now it trades with a trailing price to sales multiple of 11 times. And as of May 15th of this year, revenue expected to be recognized in the future related to the company's backlog is about 30.6 million, which management says is expected to occur over a maximum period of approximately 3 years. And just to do some napkin math, even if we expected that backlog to be realized in 2023 alone and added on top of its trailing sales to get us 48 million in potential sales for fiscal 2023, which is unlikely, the company would still trade at 4 times forward 2023 sales. So to conclude, I'm going to say this again as I did last time. PyroGenesis has potential, and we could look at potential future catalysts, as a few on YouTube wanted me to point out. But to us, the business has yet to validate its business model as it continues to post declining sales and lacks profit or even EBITDA, as a matter of fact. Now, someone could invest in the business to speculate on its future catalysts. But again, to us at Keystone, we do not believe that a long-term successful portfolio is built by buying stocks like PyroGenesis and speculating on potential catalysts, which may or may not lead the business to produce cash flow. Plus, I would like to say that its recent contract received for titanium metal powder may be interesting, but as it sits right now, the contract is somewhat insignificant in driving an inflection point in the fundamentals. Now, all in all, to us, the risk continues to outweigh the potential reward for an investment. And please, for the keyboard warriors on YouTube, this is not to say that the stock will not do well over the next 3 to 5 years. There could be a significant contract announced for its plasma torches, but as it sits right now, for our growth at a reasonable price investment philosophy, we would not recommend the stock to our clients. And I think that one of the YouTube comments really summed it up well, where the individual said, the company may do well someday, but you can't deny it's a dog right now. And I agree with that wholeheartedly. Okay.
Yeah, I think you're being generous, Brennan.
Thank you.
I'm also wondering, why did you black out the commenters' names?
I don't know. Realistically, they're all public, so anyone can see them on YouTube. But
Sure,
I
yeah.
just thought I'd be a nice guy, just in case if they didn't want me calling
Yeah,
them
I
out.
mean, listen, at the end of the day, I'm not an expert on plasma torches. Are any of you guys experts on plasma torches?
Can't say I am.
No.
No. But what I can say is that if you have a compelling product or service, it should show up in strong revenues and profitability, right? So that's the test. That's how you validate the business first and foremost, right? Once you see that minimal, and that's a minimal level of validation, once you see that minimal level of validation, then you start digging into the industry, the market, a lot of other things, right? If you're going to assume that you know the potential of some very complex technology that, in my opinion, even the world's foremost experts can't really say what the financial potential is, even though it's an interesting technology, maybe. There's so many other factors in play, like changing market conditions, competitive market conditions, great product, but can you produce it at a price that people are going to want to buy, right? All of this shows up in the financials. So when we look at the financials and we say, well, this company has lower revenue, it's losing a ton of money, so we wouldn't touch it. It's not that the financials are the end of the research process. They're the very beginning. But you have to have some type of an indication, some type of a validation that the product is saleable and that you can sell it and actually make money doing it, right? And then from there, it's like, okay, well, let's dig now deeper into this technology, right? Because there are countless companies out there that have technologies that look interesting and they can paint a very pretty picture on what the market potential is, right? But nobody can be an expert in every one of those industries. Nobody can be an expert in every one of those technologies. And again, even if you are, it doesn't mean that you can accurately predict the financial potential, right? Because there's just so many factors in play. I look at this one, they've lost $60 million in the last 6 quarters. right? They have almost no cash on the balance sheet. I couldn't remember. Did you say that there was some debt?
They did a little bit, but not, to be honest, it's not that
Okay,
much. It's
but still,
primarily leases.
minimal
It's
cash on
primarily
the balance
leases.
sheet, losing on average about $10 million per quarter. What can you say? From an investment perspective, what can you really say?
Yeah, exactly. And like the amount of time that we hear people say, "Oh, this is going to be a world changer." How do you know?
We've
You know,
heard that. How
we
many
hear it
times have we
so
heard that,
much.
Ryan, over 25 years, right? And whenever we hear that, typically it's not. Typically when there's like so much promotion and so much excitement, it doesn't turn out, right? It's
You're muted.
Ryan, you're muted.
I got it.
Is
You're
it good now? I'm back.
You're back.
Yeah, Aaron's talking about them having actual fundamentals or financials before we're going to invest. Now, there's many investors out there, often salesmen, that'll tell you it's too late. Once they have those revenues show up, it's too late. It's not a good time to invest. You've already taken all the gains out of the stock. That what I can tell you is that is an absolute fallacy in the markets. That it's too late to invest when there's sales there. I'll give you some real world examples, not just this. Oh, this technology is going to drive the stock up tenfold over the next year once the sales come in. Hammond Power is a company at the start of last year that we had on our focus buy list as a top recommendation. Well, the company was trading at like 6 times earnings then and had exposure to one of the biggest trends, the electrification of the world. It sold into EVs. Now, you could buy that business, establish sales, growth path ahead of it, trading at a reasonable price, and you didn't have to wait for a product to come online that gives you this blue sky potential. Well, Hammond Power went on to, it was trading at $12 at the start of last year. It's $42, $43 today. The best performing revenue producing stock on the entire Toronto Stock Exchange, basically over that time. Well, you could buy that not waiting for a product to be announced or released that would push that stock to the stratosphere. Well, these companies aren't easy to find. If they were, the markets would be simple, but you have to look, you have to balance whether you're buying growth at a reasonable price, whether that growth can continue, but they are out there. The businesses are out there that can do this in your portfolio without the downside that a PyroGenesis has when it's trading at $11 or $5 or $6, because it's not backed up by those solid cash flows, underlying financials, and you're always just waiting for the next great product release or the great sales contract that is just sitting there somewhere out in the ether for these companies. Find good businesses that are doing it now, that have catalysts ahead of them, and you'll be far better off in your portfolio than companies that haven't done it or aren't doing it right now and have the potential to do something in the future, just as a general rule. It's not easy to find those businesses, but they are out there. That's what we're trying to do on a daily basis for our clients, and that's what you should do in your portfolio if you want to hold on to some of your cash and also create the gains that you're looking for to change your future and your portfolio over the long term. So that's my soapbox to end off.